Hi folks, Scott here, and this is the wrap for Tuesday, July 9th. So, interesting day. Another unfilled up gap, and that makes two unfilled up gaps in a row. In fact, you can see it here on a 5-minute chart of the ES, the E-mini S&P 500 futures. You see that the low of today's action just barely broke through or tested yesterday's highs, which is the green line. Did not make it to the blue line, which is the prior day's close, and ended up with a near doji, perfect doji at the close today. Yesterday was pretty similar, right? Did not fill the gap. So two unfilled up gaps when above the 200-day moving average is probably not as common as you would think. And in fact, let me prove it to you. It's only happened 33 times in the past 11 years or so. Now, the good news is it's extremely high win rate for fading gaps the subsequent day. Now, they're normally not big gaps. The market's normally moved a little bit too far, too fast as a concept, so the bulls are not as eager to be buying an up gap the next day. Secondly, a gap down, they are eager in buying because it's real momentum to the upside. So both directions tend to work, and using an end-of-the-day stop, which is what I show here, both directions have been profitable with above-average win rates. Now, the sample size overall is still small, and I must point out, if you look at a performance graph, it's been choppier since spring of 2011. There have been some losses. So not enough to trade aggressively, but certainly a big positive for fading a gap tomorrow if the gap guides and the other data are generally supportive. So you might want to keep that in mind. Alright, so going into today, let me show you what our worksheet showed. This was posted around 6 p.m. Eastern Time last night. And gapping above the prior day highs, which the worksheet shows here, above the high, by averaging all 8 individual gap guides for the 8 indices, has met my criteria. I'm looking for 60% and a 1.3. And I almost always, in fact, I always look at the gap guides to better understand the construct, if you will, of that data. But it was, on the surface, a good positive number. There were no risk factors for shorting up gaps under the day factor category. And in terms of unique patterns, it was following an unfilled up gap and an NR7 day, the most narrow range day of the past 7, defined down here. Another positive. So two positives with the gap guide supportive as well. You can almost guarantee I'm going to trade that 9 times out of 10 on that data. And my additional analysis actually left these two other nuggets in from the prior day's comments because they were still applicable. Current market condition, generally positive of up gaps. 10-day high close, it was not a 20-day high close and above the 200, also positive for fading up gaps. And then the real fly in the ointment was the gap size. Large gaps up. And I define large gaps greater than 40% of the 5-day ATR in size when above the 10 and 200-day moving average are problematic. They're 50-50. So I had one concern, and that was gap size. So when that happens, here's my train of thought. Is the data strong enough to still short it at the open but scale out, do like a partial gap fill? If the data is, then that's what I'll do. If it's not, then I'll wait for the 15-minute range guides and try to enter on a breakdown, either a high fade or a low breakout, and this, if the gap were up, and vice versa if the gap were down, to enter the trade. Today, all of my analysis, and this is just a snapshot of the things I do in the morning. I spent about an hour pouring through the data and looking at every angle I can. Everything pretty much favored gap fill today, even for the larger gaps. So it was worth trading and scaling out. So that's basically what I said. And I said I was going to treat this like a speculative trade. In the past, I've used the word speculative to denote primarily just position size, but that's really a misnomer. Speculative, because all trades are technically speculative, right? And really what I was trying to convey, what I'm going to try to convey in the future when I use this, is a speculative trade, I have a lower win rate, and so I'm trying to address that, a lower expected win rate than I like. So I'm going to generally reduce my position size because of that, and or adjust my targets and stops accordingly to try to take advantage of the move. So for today, I thought fading the open the half size position was okay with a slightly bigger stop. Right, our gap guide showed a 5-point stop for the ES, and scaling out half at some point roughly equal to plus 4 points, and tightening my stops to like in a scratch trade worst case, and hold some of the position for gap fill area. So that was my plan. And that's pretty much what I did. In a nutshell, hold on, let me get these charts adjusted. See, all the markets sold off from their open a little bit. NASDAQ basically filled its gap, narrowly missing it. For all intents and purposes, filled it. The ES sold off and had some weakness. So what I did was I scaled out some at +4 and some at +5 because I didn't want to get too greedy around the prior highs. It's such a bullish market. I've been burned so much the past few months thanks to the Fed and its quantitative easing efforts. Adding some extra juice. I just wasn't going to mess around here. So I averaged selling actually 2/3 of my position at +4.5 points. +4.5. I tightened my stop to one tick above the high of the day. This is one tick above that pink line. That's the 15-minute range high. And was stopped for, maybe it was 2 ticks above it. Stopped for -2.25 points on that. So I made 4.5 on 2/3. Lost 2.25 in the last third. Small win. A little disappointing, but anything that's not a full stop out is generally a win in my book. So I made money. I did not do any other trades. 15-minute nor first-hour range guide showed anything attractive. There were some people that took the low fade today. I was not one of them. They said the data looked pretty good. Wasn't quite compelling enough for me, especially considering we had an unfilled up gap yesterday too, and I had data favoring gap fill. So I thought that was a little bit of a risky trade, and passed on it. But it would have worked out for you. And that was the only trade I did all day. So a good day. Made some money shorting an up gap. That's good. And we'll see what tomorrow brings us. So there you go. That is the wrap for Tuesday, July 9th.